I worked with an experienced real estate investor to create a Notion template that's going to allow you to organize, track, and optimize your real estate investments all in one centralized hub. We built a deal calculator that will allow you to make informed decisions on deals effortlessly. You'll also easily be able to monitor property performance over time, including looking at the equity of all the properties that you own. And then you'll also be able to easily keep records of rent collected, your loan, the total payments that you've made on them, the property manager and their fee, the current insurance you're using or past insurances, taxes, and the utility payments that you're making on each properties, and being able to average out what are your total costs. Ryan Hoover, who I created this template with, has 10 plus years of investing experience, and his investment group, Magnolia Group, flips 15 plus properties a year, and he personally manages 8 properties. He uses this template to manage his portfolio of properties, and now you can as well. Let me show you how it works. For the demonstration of this template, I'm going to first be walking you through the evaluation of a deal to see whether or not it makes sense to move forward. Then if we went ahead and move forward with that purchase, we're going to create the property, and I'll show you all the benefits of managing your properties in this template over time. So let's click into the deal calculator. And then first off, we're going to select new deal evaluation. This is automatically going to create an evaluating property here in our database. And then for this demonstration, I'm going to use a property that's around one that I own, since I'm familiar with the area and know of good cost estimates for it. So I'm going to get rid of this one because we decided not to move forward with this deal. So I'm going to move that one to archive so that we only have that new property here in the calculator. And then let's go ahead and enter the property address. So we're going to do 1101 South Garrison Street. Now that the address has been inputted, let's go ahead and also take a photo of this property that we can use for the cover. So I just took a screenshot, and then I'm going to come in and click here, and I'm going to add cover. And then once you've added the photo, let's go through the deal calculator here. So we're going to exit out of here on Zillow, and we can see that the property is for sale for $364. So we're going to enter that in here. And then for improvements, let's say that we probably needed to do around $2,000 worth of improvements. And then let's say that the closing cost is probably going to be around 5%. And when we do that 5%, it gives out our total closing cost amount. So now when we come over here to the right-hand side, you can see that the total cost to buy this property is $385,000. So now that we got the cost figure, let's go ahead and make some financing assumptions about this deal. So let's say that we're going to put 20% down. So 20% down, the total finance amount that we need to pay back the bank over time is going to be $291,000, but pretty much $292,000. And you can see automatically what is your down payment amount if you want to get to 20, which is almost $73,000. Then let's put in some other figures here. So for the interest rate, I think around now it's about like 7%. So we're going to put 7% there. And then we're going to do a 30-year mortgage. And then here are just some fields here that are used for some of the calculations here on the right-hand side. So we're automatically given that mortgage payment, which is $1,942 a month. And then we're also given that cash outlay of $93,000. Now that we've figured out the mortgage, let's go ahead and figure out how much we should be renting out this property to have this deal make sense. So I know this area pretty well, and I think that this property could probably rent for around $2,400 a month. Could possibly be more, but that's a safe estimate. And then once we put in that monthly rent income, we are automatically given what is the yearly rental income. And for vacancy, let's say that, we expect to be 5% vacancy. That gives us a yearly vacancy loss value, and also what we're expecting to lose monthly based on that vacancy loss value. So now that we come over here, you can see the yearly gross income as well as what you're expecting for that monthly income. Now let's take a deep dive into some of the expenses that we're going to be expecting so that we ultimately can get the cash flow of this property. For yearly property taxes, we can go ahead and find this on Zillow, and we can see for 2000 that was 1,663. Let's go ahead and just put 1,700 here for the yearly property taxes. For yearly insurance, let's say that we pay around $50 a month. Go ahead and put that by 12. That's $600 per year on insurance. For maintenance, let's say that we're actually around the property, we're pretty handy. We're only going to put this at around $400. For yearly utilities, I'm going to have the tenant pay for electricity. So really all that I have to handle is that water and sewer, which is around $30 a month. So let's put this at $360. Yearly advertising, we're not going to do any. We're just going to put it on Zillow, which is free. And then let's say that the HOA is $200 a month. That puts us at, for the yearly HOA, $2,400. And then for this property, we're not going to be using a property manager just to make sure that we're keeping those costs down. And then you can see that the yearly expenses for this property comes out to $5,460. And so down here on income, what we do is we go ahead and use this net operating income formula. And what that does is it takes the yearly gross income and subtracts it by those yearly expenses. So it takes this gross income, subtracts by the expenses, and then that's our operating income. And then for total cash flow, take that net operating income and we subtract it by the yearly mortgage cost. So you can see here that our total negative cash flow for the year is $1,405. And then on a monthly basis, it's negative $117. Then we also get that cash ROI and then your cash flow to mortgage ratio. So it looks like we might need, for this deal to make sense, to raise the rent a little bit. I know that in this area, you could very well get up to $2,700 for a place like this a month. So we're going to put the monthly rent income at $2,700 instead. And then if you come down here, you can see that we're in a positive cash flow position for the month as well as the year. So let's say that we move forward with this property. We decided to purchase it. Now what we're going to do is move it from the evaluating status to creating. Then we're going to go back to the main page and we're going to go to the property creator. And now we're going to go through and enter the main property details. So let's say that we purchased this today on August 20th. The purchase amount, let's say that we got a little bit of a discount and we were able to buy it for $350,000. But really, let's say that the market value is $370,000. And then we were able to rent it for that $2,700 number. And it's currently rented. Square feet is 1,104. It's got 2 baths and 2 beds. And it's 1 total unit. Actually, for demonstration purposes, we're just going to change this back to, let's say that we got it on July 1st so that we can show rent collection down here. So this is the area where you're going to enter rent collection here for the first time. And if you've owned a property for a while, you can do just a historical backfill of like one big lump sum, or you could also do the individual months that you've received rent on your properties. But since I just purchased this on July 1st and we rented it out right away, we're just going to do rent for the month of July. So I'm going to select new rent collection, hit continue, and then we are going to name this July 2023, and then just briefly put the property details. For date, we're going to go back to July and we're going to select the 1st, and then we're going to select end date. It's going to be July 1st through July 31st that we collected this rent for. And then property, we're going to select that new property that we just added, Garrison Street, and we collected $2,700. Next up is adding that loan. So we're going to select new loan, hit continue. For this, you can add any naming convention you like, but I like to put the lender first and then the property. So I'm going to say Rocket Mortgage here, and then the address. Then we're going to come down here and we are going to add that property. And then we purchase the property for $350,000. And then our minimum monthly payment, let's say it's $1,900. And the loan originated on July 1st, and we have that 7% interest rate. Now let's say that we've already made a payment on the loan for the month of July. So we're going to do a new loan payment. So let's say that the principal pay down was $475, escrow was $200. And because we're at the beginning of this loan, the interest is pretty high. So we're going to do $1,225. And then the other was 0 for this month. And then clicking back into the loan here, you can see that we have our payment history. So not only will it collect this first payment we made, which we actually want to name it as well. So we're going to do it for July 2023 Garrison. And you're able to see this one payment as well as the countless other ones that you'll be making over the time of owning this property. We decided not to go with the property manager because it didn't make sense with the expenses for this deal. But let's say that you are using a property manager. That's definitely possible to use in this template. All you need to do is simply hit new property manager here, continue. Then you're going to enter the property management company. You can enter some of their details like the email and then ultimately when you started with them. So we just got this property on July 1st. Let's say it started there. They're active, and then you could put in their monthly charge, which looks at the rent. And to get the rent, we actually need to add a property too. So we're going to come here and we're going to select that Garrison, and we can see that the rent is automatically pulled in here. It's $2,700. 100 and it's 5% is $135 a month. And then you can also enter in some contact details. And then coming down in the property manager company, you can see some of the details of the properties that they're managing. So if this property manager company is managing multiple properties, you'll be able to see all of the ones that they are right here. Next up, we're going to go ahead and add the insurance for this property. So we're going to select new insurance and then hit continue. Then we're going to open up that page. And here you can just enter the policy number and then the property. Let's just do something random. Coverage dates, let's say that it's going to be a year that's going to cover. So we're going to do that all the way to 2024. And then for that monthly insurance cost, we're going to say it is $30. And I've added a list of some policy providers, but you can add your own. So let's say Allstate is insuring this property, and then we're going to add the property itself and create that relation in the database. Now that you can see that we've added insurance here, we're going to move on to taxes, hit continue. We're going to do the year and then the property. So it's for 2023, that's for the Garrison property. The taxes were something like 1,100. So we'll just do like 75 here for the monthly tax cost. Actually, let's make that like 85. Then we're going to connect that property in the database. Next up, we're going to add a new utility company. We're going to be tracking the water, electricity, and other expenses that you might be paying. So I'm going to select new utility company, hit continue. And then let's say this is for water. So we're going to just say, like Water Co here. And then for the utility type, it's going to be water. Then we're going to associate that property in the database. Then we're going to add a new payment. Hit continue. Then we're going to just name this one Water Co / the property address. And then let's say that the payment amount was 40 and then it was for the month of July. On this, you also want to make sure that you add the property, do Garrison Street again. And then you also want to make sure you tie it to the utility company, who is Water Co. And then that's all you need to finish creating a property. You can see that we have all of our expenses, our loan, and the main property details. So if you come down here to the bottom, the final step in the process of you officially owning it in the system is just moving it from the status creating to owned. And what that does is it moves it into the views inside of this template that allow you to track the performance. So we can go over here to the property performance tab, and now we can compare this property alongside our other properties and track their cash flow, the monthly expenses, the rent collected last month, and then also your properties by the total owner equity percentage. Now, a few other things that we can do to tidy up that property that we just created. So there's a formula here that says location. You can also copy that to your clipboard, and you can come down here to embed a Google map, and we can paste that and embed the map. Then once the map is embedded, what we can do is we can pull this here and make it look good on the page so you can easily find where this property is located. And then you're easily able to see all of the property's information here. So we can see the cash flow, what is the monthly rent, all those monthly expenses, all of them summed together. You can always adjust the market value to determine what your equity is. And then coming down here, you can see the rent collection, the loan, your property manager, insurance, taxes, and the utility companies that are associated with this property. And then finally, here on the main dashboard, if you scroll down, you can see all the properties that you own. That's it for this tutorial of this real estate investment template. If you would like to see more templates just like this in the future, don't forget to subscribe, and I'll see you in the next video.